Fundamental analysis. Fundamental analysis aims to assess all factors that can impact the value of a security, considering both macroeconomic and company-specific aspects. Fundamental analysis involves reviewing financial statements, analyzing sales statistics, considering managerial skills, plant capacity, competitiveness, and broader macroeconomic, political, and social context. Investors should buy share if intrinsic value exceeds market price, hold if prices are equal, and sell if the price is low. Economic analysis. The status of the economy and economic events have a big impact on stock prices. When the economy is robust, stock prices tend to rise. When the economy starts to weaken, they tend to decline. Some measures of economic analysis are gross domestic product, gross national product, CPI, government monetary policy, and government fiscal policy. Industry analysis. Conditions in the industry often have an impact on stock prices. When an industry's prognosis is positive, many of businesses that make up that industry are likely to have bright futures. Analyzing an industry involves examining the commercial, political, and economic factors that impact its growth. These include assessing the influence of suppliers and purchasers, the competitive landscape, potential market trends, entry barriers, and the regulatory environment. Company analysis is examining a company's financial records, competitive advantages, operational characteristics, factors that influence its earnings, future prospects, and much more. Industry analysis is typically conducted before investing in a company. It involves evaluating the company market position, market share, capital structure, order book, and key metrics such as profit, EPS, and growth to assess potential returns and risks. Investors should also consider the company competitive advantage, as its ability to maintain a competitive edge is crucial for long-term success.
What is technical analysis? Technical analysis is a method of predicting future stock price by analyzing patterns in past price and volume data without considering economic or corporate factors. It involves studying historical price and transaction numbers to understand market behavior. By converting this data into graph and other representation, analysis can identify potential future trends. The concept of technical analysis originates with Charles Dow, the founder of Wall Street Journal, who developed a strategy for predicting market movement using stock market average. His ideas were further developed by Robert Rea, who named it Dow Theory. Dow Theory is a set of techniques for determining the main trend in the stock market. It combines observation and intuition to time the market as a whole and guide portfolio decisions. To summarize, technical analysis is a way to predict stock price based on historical data and patterns, without considering other factors. It relies on visual representation and follows principles derived from Dow Theory.
Results of fundamental analysis.
The first one is liquidity ratio. The formula for current ratio is current asset divided by current liabilities. In 2019, the company's current ratio is 8.12 times. And for the year 2020, the company current ratio is 5.49 times. Conclude that the ratio for 2019 is 8.12 times, while in 2020, the ratio is decreasing to 5.49 times. The ratio in 2020 is worse than in 2019. It shows that the company is unable to pay their short-term obligations. Dividend per share, the formula is annualized dividend amount divided by weighted average share count. The company dividend per share for 2019 is Rm 46.50 ringgit. And for 2020, the dividend per share for the company is Rm 47 ringgit. We can conclude that the dividend per share for 2019 is Rm46.50, while in 2020 the dividend per share is increasing to Rm47. It shows that the company consistently pays dividends in 2020 better than 2019 and has a good dividend per share. We go for the next one, price earning ratio. The formula for price earning ratio is market share price divided by earnings per share. Price earning ratio for 2019, the company got 19.34 times, and for the 2020, the company got 13.21 times. We can conclude that the price earning ratio for 2019 is 19.34 times higher than 2020, which is 13.21 times. It shows that this is advantageous for both the business and the investor. The next one is return on equity. The formula is net income divided by equity. Return on equity company in 2019 is 12.16%, and for the 2020 is 12.08%. We can conclude that the ratio in 2019 was 12.16%, while in 2020 the ratio is decreasing to 12.08%. It shows that the ratio in 2020 is worse than in 2019. It shows that the company is inefficient in generating higher income to the shareholder. The last one for profitability ratio, which is return on asset. The formula is net income divided by total assets. The return on asset company in 2019 is 10.61% and 2020 10.31%. We conclude that the ratio in 2019 was 10.61%, while in 2020 the ratio is decreasing to 10.31%. It shows the ratio in 2020 is worse than in 2019. It shows that the company is inefficient in utilizing its assets to generate profits. The company debt to equity ratio in 2019 is 0.025 times and 2020 0.027 times. We can conclude here the ratio in 2019 was 0.025 times, while in 2020 the ratio is increasing to 0.027 times. It shows here that the company is not relying on an equities fund.
We use the month of January 2020 market price stock pattern as our analytical investigation for our group daily trend analysis. As we can see from the graph, 2nd January 2020 is the start date of our analysis. The stock price of Ajinomoto Senderan Berhad for January 2020 shows that the stock market price is in a fully bearish pattern from the start to the end. The first price pattern is 40 ringgit 460 on 2nd January 2020. Then the second pattern price is 40 ringgit 0.560 on 7th January 2020. It shows that the price increased by 0.100 on the second pattern from the previous. By the second pattern, I will stay onto the present share as a shareholder because the market is doing well right now. The third pattern shows that the price was 14.600 ringgit on 14 January 2020. The price keep increasing and the pattern currently increased by 0.040 ringgit from the previous. Because the market is doing well right now, as an investor, I will stick onto the present stock. Afterward, the fourth pattern shows that the price currently decreased to 14 ringgit on 16 January 2020. At this point forward, the number keep going outward till 22 January 2020. Since the company price on January 16 was at its lowest position in the market since the beginning of the month, some shareholders will be dissatisfied, while others might view this as an opportunity to purchase Ajinomoto share. The fifth pattern set the price at 40 ringgit 280 on 20 January 2020, showing that the price increased by 0.28 ringgit than the previous patent. I will hold onto the current stock as an investment because the market is performing well right now. The sixth patent shows that the price is rated at 40 ringgit 320 on 22 January 2020. The price increased by 0.040 compared to the previous number. As an investor, I will hold on to the current stock because the market is currently performing nicely on the sixth patent. The last patent is on 28 January 2020. Shows that the price is 40 ringgit. The number decreased by 0.320 ringgit on the last patent. As the shareholder, we should buy more stock as the price keep decreasing and wait till the price keep increasing to sell.
And now I'm going to talk about the secondary trend for Ajinomoto stock price. By examining graph number 1 right here, the market stock price for Ajinomoto from February 2020 until the end of June 2020 is depicted as a trend. The market stock price was Rm 13.92 ringgit on February 10, 2020. From then, it began to rise to Rm 15.98 ringgit on February 21, 2020, an increase of Rm 2.06 ringgit. As March rolled along, the market stock price started to drop quickly and stopped at Rm 9.96 ringgit on March 17, 2020, a staggering Rm 6 ringgit 2 cent difference. As the market stock price is at its lowest in 2020, for some shareholders it will be bad news, but for others it will be an opportunity to purchase Ajinomoto stock. According to the Ajinomoto stock market, which started its bullish trend after the decline in the signal, the stock price rose to Rm 13 ringgit 62 cent. As a shareholder, I would hang on to the current stock because the market is in a positive mood. Next, on June 9, 2020, the price rose to Rm 15 ringgit 50 cent. The market stock price continued to rise. However, on June 12, 2020, the price fell by Rm 1 ringgit, giving stockholders the chance to purchase more shares. Next, graph number 2 right here displays the price of Ajinomoto shares on the market from July 2020 until the end of December 2020. As a shareholder, I would sell my stock because the price is at its highest in 2020 at Rm 17 ringgit 26 cent per share on July 3, 2020. The price dropped in August 2020, reaching Rm 14 ringgit 84 cent on August 12. However, the price spiked to Rm 16 ringgit 86 cent on August 25, 2020. Following that, on September 11, 2020, the cost dropped to Rm 15 ringgit 64 cent. The price increased to Rm 16 ringgit 78 cent on September 21, 2020. As we approach November, the market stock price of Ajinomoto began to fall, reaching Rm 14 ringgit 2 cent on November 2, 2020. As a shareholder up to this point, we can anticipate the price will quickly rise after analyzing the zigzag pattern that started to occur starting from July 3, 2020. So as a shareholder, I will buy a number of stocks as anticipated. On December 31, 2020, the market stock price grew to Rm 16 ringgit 2 cent, a rise of Rm 2 ringgit from the previous month. Before deciding whether to buy or sell stocks, shareholders should carefully consider the price movement on the stock market.
For the conclusion, to forecast future price movements, traders use technical analysis, which examines past price trends, volume, and technical indicators. It helps identify trends, support and resistance levels, and entry or exit points. Fundamental analysis assess a company's financial standing, industry position, management, and macroeconomic factors. It evaluates the intrinsic value and growth potential using financial statements, earning reports, and industry trends. Integrating both analysis helps reduce risk and improve returns. However, no method can guarantee accurate prediction due to factors like economic and geopolitical developments. throughout research and considering multiple information sources are essential before making investment decision. So, that's all from our group. Thank you.